Hi, I'm Elizabeth Lumley of Finextra, and today in Conversation With, I'll be speaking to Elaine Fletcher of IBM, and we're going to have a conversation about Global Chief Marketing Officers, CMOs. So IBM recently conducted a survey of CMOs that looked at various challenges affecting this role right now. You know, a number of challenges sort of came up in the survey, you know, one of them being social media, the proliferation of channels and devices, shifting customer demographics, and of course the explosion of data. There's so much data in use right now. So, you know, did any of these challenges in the survey surprise you at all?
I think they were pretty much along the lines that we were expecting. I think perhaps a little bit more severe than we were expecting, but the top ones were the ones that we thought would be the top ones. And I think the reason for that really is because if you think about it, it's the shift in social demographics, the rise of the young, basically, that's driving all of those four. Because the young engage differently with their organisations, they engage differently between each other. So they're much heavier users of social media. They do a lot more communication, so you've got a lot more volume and complexity of the data, hence the data explosion. So they're all very closely related.
Yeah, so I was going to ask you sort of which one of those caused almost the most anxiety, and yes, it was sort of the shifting customer demographics.
Well, it's funny really, because if you think about lead and lag, the lead one, the cause really is the change in demographics, but that wasn't the one that created the most sort of concern. It's actually a lag indicator, which is the explosion of data, because that's the thing that's most visible to people. So without the change in demographics, you wouldn't have had that problem. But the thing that's really keeping people awake at night. If I refer back to my notes here, we can see that 74% of the CMOs that responded out of the 1,700 basically said that they feel unprepared to handle the data explosion. So in terms of anxiety, that is number one. So the number two was 72% social media, 62% was growth of channel and devices. And again, that's driven by the young because they tend to use a lot more different devices and channels. People of my age tend to do things in a very similar way. We'll ring the call centre or we'll go on the web and we tend to do the same thing, whereas the youngsters will do different things every day.
So would you say it's sort of like trying to wrangle all this data is kind of the most pressing priority for CMOs right now?
Indeed it is, because CMOs have traditionally been very good and had a lot of tools at their disposal to handle what we would call simple structured data. So basically transactions have been stored and analysed for many years now. So people are used to growth in data volumes in transactional structured data. What they're not used to though is the phenomenal growth of highly complex data that's completely unstructured. So things like this conversation would be available, emails, blogs, lots of things that have no format whatsoever, can be very long, nuggets of information can be embedded really deep in a lot of this complex data. So if you just think about it, it is the devil's own work to make sense of that. You need a lot of very detailed algorithms to find out sort of, you know, sentiment and different things of what people are really trying to communicate. You know, you have to understand sarcasm and irony that people will use, particularly young people.
Putting a webcast in a data field that wouldn't really fit.
Yeah, well, they do. Yes, yes.
There was another thing that came up in the survey that interested me, was this idea about CMOs are really struggling to be more customer-centric. And, you know, in Finextra, we write a lot about, especially with banks, trying to improve the customer experience and changing their whole focus to be more focused on the customer. But the survey kind of showed that CMOs are really struggling with this. So why is that?
I think there's a number of different reasons, but the one that I would say is the most difficult to conquer really is it's a holistic problem, because if you just think about most of the financial institutions, and not just financial institutions actually, most companies, but I think it's particularly bad for financial institutions, is that you have product silos and you have channel silos. So the people who are very powerful on the board are the people with the most profitable P&Ls, basically the different product sets, and then the second in command with the second loudest voice basically are the people who own the route to the market, so the different channel owners. So you've got a very sort of siloed type of organisation, and then stuck in the middle is the CMO, who traditionally, you know, he's been seen as a really, really important part of the organisation because he owns brand, etc. But he doesn't bring in customers, you know, directly. So he hasn't really been measured in terms of really hard ROI. He is now, but traditionally he hasn't been. So the difficulty is that to become customer-centric, you've really got to get the powerful voices on the board, the product P&L owners and the channel owners, to align behind a really compelling business case. And that has been the real problem, because if you think, it's a highly complex business case to try to be customer centric, because a lot of people will say, well, initially it's about cross-sell and upsell. It's about, generating direct revenues, increasing share of wallet, etc. But really in financial services it isn't. It's number one, it's about customer trust and customer care. So it's about proactively telling Elaine Fletcher how to get the best value out of the things that I've already trusted my business with you. So it's about me getting to trust you to say, actually, you've got my interests at heart. You're monitoring things. I've told you my attitude to risk, and with the volatility in the market, I'm expecting you to give me a nudge when something's getting close to where I'm going to get uncomfortable. Or perhaps I'm somebody who doesn't keep much in my current account because I put it all into interest earning accounts. So you could tell me within sort of 8 days with predictive analytics, if I don't change something within 8 days, I'm going to get an unwelcome surprise in terms of a charge. So you could tell me about that and just say, this is going to happen unless you do something. Would you like me to do X, Y, or Z? And I'll say, oh, why, please? And then I'll walk away from that thinking, actually, they're doing their job. And then once I've got that level of engagement and trust, you can then start selling me other things. And one of the things really is about getting what we would call a single view of Elaine Fletcher. So Elaine Fletcher might have 5 or 6 different relationships. That's a big topic, the single view of the customer. They don't have it at all in financial services. And that's a difficult thing. And that, for me, is the first step. We don't have to know everything about Elaine Fletcher, but we just have to sort of scrape off the 20% of information that's going to make the most impact in terms of my relationship with the organisation.
Yeah, so if a lot of firms, including financial services firms, measure the success of their business by how much profit they're getting from mortgages or how much profit they're getting from credit cards, instead of how they're sort of handling the customer. What is the barrier that's causing the financial services industry to be behind in being more customer centric? Is it the data? Is it the silos? Or is it really sort of like an overall culture?
It's the culture that's really the biggest barrier. If we get through that, then the silos will drop. And I have to say, quite a few of the tier ones are starting to move that way now. So we've implemented a couple this year, and we're talking to a lot of people now who are implementing large programs, during the early parts of next year. And for me, the secret is coming back to that compelling business case. If we can get the various different stakeholders across the organisation, so it's customer care, it's all the sales and marketing across all of the different product lines, it's all of the different channel owners. We have to get everybody aligned behind a business case. So each one of those stakeholders has really got to be certain what the ROI is for them and under which circumstances. So what we've done is we've put together what we would call a sort of a proper detailed cause-effect business model that can say to the organisation, here's you as you are, here's you in the vision of customer-centric, and here's a sort of an ROI-focused heat map that can carve this journey, which is a complex journey. I can't say anything other than I wish I could, but it is a complex journey because it touches all parts of the bank, insurance, or whoever you are. So what we do is we use that ROI heat map basically to carve that journey up into small pieces of typically 3 to 4 monthly incremental steps, where each increment will stand on its own 2 feet in terms of ROI. So what we aim for really is a self-funding programme. And that's what we've been able to achieve, with the ones that we've done so far, and hopefully, touch wood, we will with all of the ones sort of going forward. So yes, it is a big programme. But what this cause-effect business model allows you to do is look at those 3 monthly steps and the sort of the salami slicing of incremental benefits coming through in steady state. And then it allows you to sort of pull different slider bars across as you might want to. The different stakeholders can pull them on their own, and they can get together and do more complex use cases where you can say, well, actually, yes, it looks good, but what if this happens? What if the market does that? What if that customer segment or that group of segments do this? What if this? What if this? What if all of these different things collide? What does the salami slicing of benefits look like? At what point is it not viable to do this? And because we run all of those, and it takes quite a long time actually in terms of different stakeholders like to play with this up front with us and then go away on their own and play with it. It's a little bit like, you get somebody with a new toy. It's quite addictive, but it's great because people have a lot of concerns. Nobody can predict, particularly at the moment with the volatility, what is going to go on, what if the regulator does this, yada yada. There's lots of different things that you want to bring to bear and collide with each other such that you can actually get a good view of, well, actually under most circumstances I'm comfortable with this programme, but I really do understand now the the scenarios and collision of circumstances that make this programme less tenable. So I'm aware of them as a stakeholder. I can then sit down with you. You've got a different view. We can work together. We can use the model to make sure that we end up with alignment. And that is the single biggest step that we've found that people need to do before actually embarking on these programmes, because they are complex and they touch so many different stakeholders across the organisation. You need that space basically to do the sandboxing, the what ifs, to get comfortable with things and then to discuss.
So that idea, like that idea of the heat map and the direct correlation to ROI, I mean, that the sort of show me the money, that's
exactly.
that really the main strategy that CMOs need to employ to get the higher ups to,
I think it's absolutely, it really is, yeah. I mean, I would love to say it's all about customer trust. And really it is, you know, as a customer, we're all customers, we know that, but, you know, customer trust yields ROI. So it's a driver of something, and it's a tangible ROI that people want to measure the success of a programme on.
So, I mean, although there are barriers to changing this business model from channel and product-centric to customer-centric, you know, where did the lesson happen that product and channel-focused marketing is not as effective as customer-centric is now? When did CMOs try and realize this?
It's actually different for different markets. So if I look at some of the different sectors, retail and telco have been doing this for a while. And what they realise, and I think the financial institutions really get this now, it's if I look at myself, say as a bank, I offer lots of different, even just a bank looking at retail, I offer lots of different products and services to the same customer set. However, most customers, most Elaine Fletchers out there, will cherry pick. We'll do a sort of, a pick and mix approach to, well, I'll have my mortgage over there, I'll have my current account there, I'll have some savings there, I'll spread my risk, is what most people think. And the problem is they have these wonderful financial institutions that they're basically treating a bit like walking down a market and cherry picking different things from the different stalls. So they're not getting the benefit of a deep level of engagement with their bank. Similarly, the banks aren't getting the benefit of a lot of loyalty, trust and share of wallet with the customer. So what we're basically doing in terms of being customer centric is really understanding, getting underneath the skin of the customer, and not just Elaine Fletcher, but realising that Elaine Fletcher's money doesn't come in for Elaine Fletcher. For most families, it goes into a family pot, so there might be some personal stuff, but there's also some family stuff, the mortgage, the insurance, the various different things. So actually householding to say, well, what can we do to bundle the different products and services to Elaine Fletcher? So the first stage is to get my trust by proactively helping me to get the best out of the business that I've done so far with the organisation, but then saying, because we have this level of trust between us now, we're willing to offer you a bundled package. So a bit like the telcos and the media companies do, you know, you will generally get your TV, your broadband, your landline, your mobile, various things now. Everyone takes for granted, well, you get them from one place, don't you? Because it's a lot cheaper, it's a lot more convenience, there's lots of benefits. You know, very few people bother to cherry pick in those sectors now. I think, you know, the same thing will happen in finance, not overnight. It's going to take, I think, 3 to 5 years before that becomes, you know, the norm. But a lot of organisations, tier one, you know, over in the UK that I'm working with at the moment, are implementing programmes to do this. So, you know, they have the vision. I think they've had the vision for a long time. What stopped them acting so far has been lack of a business case.
But I think also, I mean, you know, the last few years, from a PR perspective, banks haven't been, you know, in that good a light with trust with the public. And it was interesting how you talked about, you know, that a bank is part of your household. And I was talking to a customer experience head at one of the major banks who said, she was speaking to a customer who said, you were there with me when I bought a house, you were there with me when my kids went to college. When I was going through a divorce, you weren't around. And they didn't quite, you know, realize how much a bank sort of is part of your life.
Oh, very much so. People remember. Yeah. So as an example, I'm one of these people who are boring people. I have a lot of different things with the same bank. So there's a lot of trust there, or a lot of apathy, whichever way you look at it. But recently my oldest son left university and he came home and he wanted to apply for a loan, small loan for his first car. You know, doesn't earn much yet. And bank didn't want to know, and that hurt me. I thought, goodness, I've got all this business with you. You can't help me. The one time we want something, so now I have a bad view of them. My son has a bad view of them. He's going to be rich later on when he's older. He'll still have a bad view of them. You know, what would it have taken for them to give him a loan? You know, and you think of that, you know, and the wider context of all of the families. You've got to understand what are the life cycle points of each household, not just each customer. Because hearts and minds are shared in a family.
Yes. I wanted to wrap up the interview with talking a little bit about ROI, because it was one of the things in the survey came out about how much ROI pressure is now on CMOs. And I wanted to find out, you know, where that came from. Is it because it's harder to match marketing projects to ROI now, or are there now extra ROI demands?
I think it's the latter. I think it's no harder to match ROI or calculate ROI. But I do think there's a lot more pressure now on marketing departments to prove ROI, not just after the event, but beforehand. So I think every main initiative that the marketing officers are engaging in now, they have to, not just within their own department, but they have to make sure that everyone around them, all the different stakeholders, are aligned behind that initiative. And that really means forecasting the ROI and forecasting it very accurately.
You
and
using
be able
metrics
to monitor.
yeah.
That's right. So the kind of metrics that people are using now, I think, have changed from even what they were 12 months ago. So the type of metrics sort of 12 months ago, if I refer to my crib sheet, they were all very sort of product-centric KPIs. So typically you'd be looking at revenue as sort of, you know, gross millions of new business. You'd look at average market share as a percentage of sort of new business volume. And you'd be looking typically, you know, average profitability as a percentage of cash margin. So those would tend to be the, you know, the traditional product siloed type of measures. But now people are looking much more at customer-centric key performance indicators. So there we're looking at the top one, which I think most people probably wouldn't recognise yet today. And that's what organisations call a customer engagement score, and that's coming together with trust. So that's basically saying until Elaine Fletcher gets to a certain level of trust with my organisation, I'm actually not going to attempt to cross-sell anything to her because I'm just going to irritate her. She's got to trust me first. So that's the first thing. And how do you calculate that? So you can look at, you know, what percentage of Elaine Fletcher's holdings has she got with me? How much does she transact? So she might have a current account with quite a lot in it, but if she's, you know, and she might have a salary going into it every month, but if she does hardly any transactions, you can tell she's got other current accounts elsewhere, and it's just, you know, funding off. It's not her primary account, you know. So things like that would give me a low customer engagement score. So it's about sort of giving me a feeling that you're looking out for my interests better than the other people that I'm doing business with. Therefore, then when you give me a cross-sell, upsell message, it's pertinent to me, you understand my life cycle points, you understand what I'm in the market for and why, so you make the right offer at the right time over the right channel, and it's customised for me, so it feels like it's a one-to-one relationship with my bank. I feel like I've got my personal banking advisor there. And the thing is, because that's driven by deep dive analytics of data, it doesn't matter how I decide to speak with you, over what channel, I'll get exactly the same message. And what that gives to me is, over time, my customer engagement score starts to go up. I start to be receptive to things that you're telling me about customer care, and then I will be receptive to things that you try to offer me to increase my level of business with you. And as long as I get the same or better quality of care as I go up that customer engagement score, I carry on going up. And we've seen that in lots of different industries. And we're starting to see that with a few organisations in financial services that are doing that with us so far. So it does work, but you have to measure different ways. So you have to look at the customer engagement score, revenue per customer, profit per customer, wallet share per customer. We're also looking at the average number and volume of customer services interactions as well, because that has to go up. And that doesn't have to be a high cost, because a lot of those customer services interactions can be automated, you know, depending obviously on the preferences of the customer. So privacy and protection is a big thing here. You know, the customer
You're talking about like checking balances on your phone or
that's right, yeah. But what we're also talking about is the bank proactively contacting me about my business with them. So that's fine if I want it, but equally if I don't want it on a particular channel or I don't want it at all, I've got to have the ability to easily switch it off, and not just switch it off for the current account and then find they're giving me noise about some of the other business I do with the organisation. I just basically want to say, not on my mobile. So that's a big thing that a lot of the organisations are working with us on at the moment as well, is in terms of, beefing up the privacy and protection. And that's a really good place to start, because if they haven't got a single view of the customer to start off with, that's a good place to start, because you've got to have a single view of Elaine Fletcher to allow me to say, not on my mobile, please, across all products. And that's, that's something that's of interest.
Well, we're running out of time, but I just wanted a really quick final question, because you mentioned a few organizations, but is there any company, any firm, bank in the financial services firm that is sort of doing things right, going in the right direction?
I don't think there's anyone who's done it yet. I think there are people who are going in the right direction, so they're implementing programs, and so far, as I mentioned before, it's a sort of a softly approach, where we have these incremental roadmaps of sort of 3 monthly drops, each one closely measured on ROI. So far, the ones are yielding above predicted ROI. So as long as more people start doing them, I think as a sector you'll start to see a move in the sector, but it takes quite a long time of things to go little by little before you'll see the tipping point and stand back and say, I honestly believe it's going to be probably 3 years' time before we see a lot of change across a lot of financial services organisations, because I think anyone who tries to do this big bang won't succeed. I think you've got to be softly, bite by bite with this approach.
Okay, excellent. Thank you very much. Very interesting.
You're
Once
welcome.
again.